The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
TFNN Thursday morning, 8:30 a.m. as we await the weekly initial jobless claims. Always an interesting time on Thursday. Right now, we've got S&P's flat at 33.69. Quite the charge higher yesterday, reaching a high of 33.82. You're talking about 17 points away from all-time highs in the S&P's. NQ futures up 44 points, 11,171. The Dow right now, negative 1 point at 27,865. Jumping around to commodities, crude flat at 42.66. Quite a bounce on the crude contract as well. And we got our man Dave White, the Tiger's Den right now. He's talking about 963,000 initial jobless claims from 1.1 million was the estimate. So you're talking about 150,000 jobs less than the market. I should say 150,000 less unemployment claims than the market was looking for. But the S&P digesting that information, down about 1 point right now, hanging tough at 33.68. As we mentioned, crude flat at 42.64. You see the rebound we had from the acceleration to lower prices on Tuesday. We get a bounce into Wednesday, and we're right back to where we were almost at the beginning of Tuesday's action. Gold contract, negative $19 at $19.29 early yesterday. At about midnight, actually, overnight, $18.74 before gold contract charged higher. Actually made it up to about 1960 at one point, 1961 actually in the middle of the day yesterday before trailing off a bit by the close. Silver up 2 pennies at $26 on the dot. Silver 23.58, the low that it had about 36 hours ago. Note and bond market flat right now. The note market at 139.06, the bond at 178.23. We put that in a little context for your daily. We'll start things off. As you can see, just kind of navigating right back under that area that it has struggled with for so long. And jumping over to the yield right now, we're dealing with a 10-year yield of 0.68%. 5%. Quite a number when we were flirting with basically about 0.54% for the yield for a while. This jobless number market just holding tough. 33.70 right now in the S&Ps. You put it on a daily, folks, and there you go. Talk about close to all-time highs, about 27 points in the futures market. We are away from that S&P all-time high. Jumping around to what else we have going on, we're going to pull over for some of the breakdown in the jobs. So, we'll look for more information, but we have under a million for the first time since March 21st. Pretty interesting. There's your print, 963,000. The estimate was for 1.1 million. Seems like the market should like that number. First time under a million. Always a lot of variance that might come in, but pretty good data. Pretty amazing, though, that we look for weekly initial jobless claims of 963,000 might be a good indication when the record before COVID for any weekly jobless claims number was about 700,000. And we're approaching, I think it's 19 straight weeks of right around a million. We beat it by 37,000 this week, but pretty close to that million mark. All right, what else we got going on? Cisco out with their numbers. Disappointing quarterly guidance as revenue continues to drop. We got Cisco trading lower. The company announced a plan to buy network monitoring company Thousand Eyes. They call the fourth quarter consecutive revenue decline in its quarterly guidance. Getting into the numbers, 80 cents a share for earnings. The market was looking for 74. Revenue, $12.15 billion. The market was looking for 12.08 to get into Cisco numbers. And as we mentioned that, the markets, look at that green across the board. The market's going to like this number, I think. Cisco, we're trading down almost $4. So there's your daily. Now, we're going to open at about 44.50. For context of where we are on that chart, you're coming right into this acceleration we had from early June, putting it on a 15-minute. There's your drop-off on their numbers last night. From 48.50, you drop out of bed to about 55. You have the earnings call. Nothing changes there, and we're trading just under that level right now at 44.59 in Cisco. Also had Lyft earnings out last night after the bell. Lyft trading lower on their numbers. They're facing a lot of headways, folks. They got no food delivery. They don't have as much exposure to overseas markets as Uber does. and they are a much smaller company. As of yesterday, they were about a $9 to $9.5 billion market cap. That number decreasing as it's traded a bit lower. $29.60, going to open about $1 lower on Lyft on their numbers last night after the bell. What else we got going on? Stocks making moves. We'll get into it. All right, 3M I wanted to go over. Reported a 6% increase in July sales compared to a year earlier, noting a broad-based improvement in sales trends across its businesses. So they said late in July that sales for the month to that point were up in the low single digits. Jumping over to 3M shares, Triple M. We're all familiar with their masks, but they make a lot more than masks. Up a bit from 164 to 166 for some context on where we've been, all the way to 114. Their last earnings, a little bit of a tough deal as they came out and said, yeah, we're selling a lot of masks, but we're not selling much else. You trade to 150, we're going to open about 166. We were trading at about 182 early in the year. You drop out of bed in January, and then COVID really starts at about 160. So we're kind of above where we were when we came into the COVID collapse in the market. Apple. So I got this one up. Pretty interesting in the battle for content, right? We've been talking about Disney a lot. I am a super long bull in Disney. I wrote an email to one of my subscribers yesterday. I said, hey, I'll give everybody a free tidbit. One of the things I've been talking about, if you have the ability to be a long-term investor, to buy Disney, to hold Disney through the coronavirus, through COVID-19 in its completion, I see that as a great long-term investment. You never have guarantees in life. There's a lot going on. Disney's going to be facing woes now. College football, having a very difficult time getting started. That is going to hurt them in ESPN ad business. Usually a great time for ESPN to be selling a lot of ads. ABC, ESPN, all a part of Disney. That looks to be very difficult, if not impossible, in the college sports arena. But if you're able to deal with the variants, make it through, survive to the other side, I see a big deal for Disney. But Apple, they reportedly plan to launch a new bundled subscription service for music, news, and more. So they're preparing to launch a new subscription plan that bundles several of its services together, Bloomberg recorded today. According to the report, Apple plans to package services like Apple TV, Apple Music, Apple News, Apple Arcade, and iCloud storage into different plans that provide consumers a discount for packaging everything together. That's a lot of services. People are usually going piecemeal these days. Do you really need TV, music, news, arcade, and iCloud all from Apple? I'm a big Apple fan. I got an iPhone. I do not subscribe to Apple TV or Apple Music or Apple News or Apple Arcade. I'm a big Apple fan. But that's a lot of services when you got so much competition to the likes of, so then are you going to have Netflix? Are you going to have Disney? Are you going to have Hulu? Are you going to have ESPN? Are you going to have Prime? Are you going to have HBO? Some of the Apple services have reported been off to a slow start, like Apple News. Who is paying Apple News for news, folks? And I'm all about news, all right? You got to stay informed. The best way to do that is to have multiple avenues of where you're getting your information from. And it's just very difficult arena to be in. I don't know if that's going to be a smart play. Apple, they got plenty of fanboys. But the services typically cost between $5 and $10 a month. The report said Apple's preparing several different tiers, including one that offers everything and others that bundle some services, but not others. To put it in context, so each one's usually $5 to $10. You're going to bundle them all together, as opposed to, and that's part of the deal that I love with Disney. I mean, talk about undercutting. Now, Apple, we're going to open a bit higher. Whoops. We're trading right now at about $456.89. There's your pop there on Apple. $457, even higher, but we'll see where that goes. Stay tuned, folks. We're going to come back right in 3 minutes. I think we got a break coming up, do we?
Is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den, absolutely free for 30 days, and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got the S&Ps now plus 4 points. We got NASDAQ and Q futures plus 68. The Dow positive 26. You see the bounce we got. I got a 5-minute chart there. 33.82, the highs of yesterday. We come into the 8:30 weekly initial jobless claims number, and we've now traded up about 7 or 8 S&P points on that number. You see the volume spike right at 8:30. And let's get into a little bit more of the numbers on what we have going on at 8:30. So the headline number you're going to see, under 1 million jobs, under 1 million jobless claims, 963,000. Number I'm always looking for is what's the continuing claim number as well. Continuing claims, 15.5 million, a decrease of 604,000 from a week ago. Encouraging data, but we got a long way to go, folks. We're at 15.5 million. If we're coming down at 600,000 right now, is that number going to keep charging to a low level? When you look at initial jobless claims, this number, the lowest number since March 21st, which was the first week we were just creeping into the COVID shutdown, where I believe it came in at about 282,000, and it was March 14th. There you go. 282,000 just as the pandemic declaration first hit, and everybody knew there was your 200,000. The next one we knew was going to be staggering, and then it followed suit from there. 7 million, 6 million, 5 million, 4 plus 4 million. We're now at 963,000. Hopefully that trend continues, but still quite a number that we got to get off those rolls in terms of 15.5 million continuing claims. Okay, getting into Lyft a little bit. So they had their numbers last night. The company just beat analyst expectation, losses per share of 86 cents and revenue of 339 million. The market was looking for a loss of 99 cents. And revenue of 336 million. However, Lyft said rides in July were up 78% compared to April. Folks, I really don't like when companies talk about the percentage gain that they have from the depths of despair that many of the companies had. What I want to know is, tell me the percentage of business you're doing compared to what you were doing pre-COVID. Because when you deal with percentages off very small numbers, which is what Lyft was dealing with in April, they can be very misleading. And when you get into the numbers, Lyft's second quarter earnings showed a 61% revenue drop during the same period last year. Average active riders 8.7 million is all they had. Folks, that is a tiny number when you think about the amount of people across the whole country, let alone exposure that they have. Now, they're much more focused on North America and the U.S. Lyft is versus Uber. You saw a quick spike in this, which was interesting, right? Lyft jumping back. So initially, the market said, oh, hold on. We lost less than we thought we were going to lose. We had more revenue. And then kind of the market said, yeah, but you know what? Business is down dramatically. They only got 8.7 million active riders. And both of these companies are dealing with, we'll jump to the next headline, a temporary shutdown in California if forced to classify drivers as employees. So I was on the Lyft earnings call listening to that last night, talking about a lot of things. One of them was this California deal, and Lyft said straight out that they might need to shut down. And they didn't say for a few months. You had Uber CEO yesterday saying that they may need to temporarily shut down for several months if a court does not overturn a recent ruling requiring it to classify its drivers as full-time employees. So listen, we would need to completely reorganize how we did our business if that's what happened. You actually had Lyft saying we'd have to shut down, and they didn't say for a month or two. I don't know how that plays out. It's definitely a headwind in both of these companies that we will watch closely as we take a look at them. But Lyft down about 70 cents, not too dramatic. And you have Uber down marginally as well from 30.84 to 30.60. You came into their earnings at almost 35 for Uber, and now you've basically given up the entire run-up. Let me put this on a little shorter time frame. I'll get this off. I mean, this was the run-up into earnings from 29.79 to basically 35, just shy of it. We've now given back all that optimism to 30.60. This is another company. Now, I talk about Disney. Uber, there's a lot more variance here, a lot more risk when you're dealing with a company that's dealing with regulation woes in the biggest state in the union, California, and they are dealing with woes in terms of the travel industry changing forever. Now, I think Uber's going to be around. I think long-term it's a solid play when you get into the food delivery business and so forth, but they have a lot to do in terms of overcoming the problems they have. Putting in a little Fibonacci numbers in here, the run it had from 13 up to 38. We've talked about this in my newsletter, Rocket Equities and Options, a couple times. That 38% retracement, this has just been chopping around, and that seems to be some support. We're about $1.50 from that level right now at 29.29, and look for that level if you are in Uber at all. All right, what else we got going on? There we go. Smile Direct out with their numbers, quarterly loss of 17 cents a share, 3 cents more than the market was looking for. The maker of dental aligners did see revenue come in above analyst projections, but revenue was down 82% from a year earlier. SDC is their symbol. Put it a little shorter time frame. We're trading lower this morning on their numbers. There's the spike initially to 9.88, and then you fall out of bed. We're trading down about 50 cents on a $10 stock on Smile Direct to 8.81. Vroom reported a wider than expected loss in its first quarter as a publicly traded company. They are an online used car seller, did see revenue come in above estimates. Pandemic, of course, a key factor. Sales tumbled more than 60%. VRM is their symbol. And there you see the fall out of bed from 70 to 54. We're trading at 53. That one's going to open dramatically lower on the open. Disney, talked about Disney a lot. So Disney, actors at Disney World have resolved a dispute after COVID-19 testing, with Disney agreeing to provide a virus testing area outside the park that will be run by the Florida Division of Emergency Management. The actors, who cannot wear protective masks while performing, had argued the company proposed safeguards were inadequate, so it looks like they've come to an agreement. Always nice to see if you're a Disney shareholder. Disney's had some nice accelerations here. You put this on a daily, all right? I leave this chart up there for myself, a nice little trend line. We're near the end, the top level of it, but talk about a well-defined channel right near the top end of that. Look at this volume we got on their earnings spiking higher on the news that they got 100 million subscribers, etc. I've talked about it many times, but good news there on Disney for sure. United, they're going to add 28 daily flights to 4 destinations in Florida in November, but said it was prepared to cut those flights back if coronavirus levels in Florida remain high. So a little bit of optimism on these airlines, saying if things are going well, we are going to plan for it. But we have a long way to go, folks. Florida had a big number yesterday, about 8,600 cases, I think. Then the news comes out that somehow there was one testing lab in the Miami-Dade area. that had 4,000 cases that end up dating back the last 7 weeks for backlog. So that was like an anomaly, right? And then the story this morning that I'm reading, this comes out last night, but I was reading this morning talking about the decline of testing, accuracy of the testing data thrown into question, decline in testing. Folks, we don't want a decline in testing, okay? That's not what we want. That's not what we want at all right? The country recorded an average of 52,000 cases every day for the last 7 days, down 19 cents. However, testing has declined as well, falling from an average of about 814,000 tests over the 2 weeks to 716,000, a 12% decline. That's why I'm always watching the positivity. In Florida, the positivity back above 10 at about almost 12%. I'm hoping for an anomaly on some of that Miami-Dade data, but we'll find out. That data released at about 10:30 each morning. All right, folks, stay tuned. See what else we have on tap. S&P is positive by 3. Markets in green territory. We'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. S&P's right now positive by 3. NASDAQ futures positive by 68. We got the Dow positive by 22. I got Simon Property up there. Talk about some woes in the mall business from 140 down to 42. We're trading at 67. News out from them in terms of Simon and Brookfield. They're in advanced talks to jointly purchase JCPenney's retail business, according to people familiar with the matter who spoke to the Journal. The shopping center operators are two of the bankrupt retailers' biggest landlords. So what happens? You have Simon and Brookfield. They are the biggest landlords when it comes to JCPenney. So what are they going to do? Instead of letting JCPenney go out of business, they're going to try and buy their customer to make sure they keep them in business, essentially. Pretty interesting to see how that shakes out. A lot of dynamics in play. The story was just out there earlier in the week that Amazon was in talks with Simon to potentially purchase and rent and lease that same property in terms of JCPenney and Sears in those properties. How that plays out, how Amazon builds a shipping warehouse in a mall with foot traffic, how they capitalize potentially on that. It should be interesting to see, but lots going on as those malls. There's going to be a transformation, folks, because malls, they're in trouble for the next year, and they were already in trouble as they need to transform their whole business plan almost. Fossil out with their numbers, quarterly loss of 23 cents a share. The estimate was $1.71. How about that? Revenue easily exceeded estimates from the maker of watches, handbags, and other fashion goods despite the pandemic, so decent numbers out of Fossil. Whoops, we'll pull that back up there. FOSL is their symbol. And from 464, quite a pop, folks, as you'd expect, to 511. We're up about 50 cents. That's about a 10% pop on Fossil numbers. All right, jumping around to some of the FANG stocks as we wrap up the day. Amazon looking to trade a bit higher with the market. 31.80. Microsoft shares 209. Quite a charge yesterday. How about Apple? You can't hold Apple down. It just keeps charging higher, folks. 457.52. Putting Apple on the daily. We're within about 13 pennies of an all-time high on the open for Apple. And we'll check on the VIX as we wrap it up. The VIX 22.14. Stay tuned, folks. We got our man Larry Pesavento. He's coming up live next. We'll be right back.